Your client worked overtime in 2025. Can they deduct it? Maybe, but only the part the IRS calls qualified overtime compensation. A 2025 law, the One Big Beautiful Bill Act, created a deduction for qualified overtime compensation for tax years 2025 through 2028. The deduction is capped at $12,500 or $25,000 if you file jointly. Phase-out starts at $150,000. If filing jointly, it starts at $300,000. Here's the catch. It's only overtime required under the Fair Labor Standards Act, the FLSA. And only the premium portion counts. If overtime is time and a half, the deductible part is generally the extra one-half. Not qualified overtime includes overtime required only by a union contract, only by state law, and overtime for FLSA-exempt work, including many agricultural jobs. If an employer pays double time on a holiday, the qualified amount is still limited to that overtime premium, not the full extra pay. FLSA coverage is fact-specific, job duties, activities, and sometimes earnings. The IRS points people to Department of Labor resources to determine coverage. For 2025, separate reporting of qualified overtime on W-2s and 1099s isn't generally required. Some employers may still provide it. After 2025, separate reporting is expected on updated forms. To claim it, taxpayers report qualified overtime on Form 1040 Schedule 1A, and they'll need an SSN and joint filing if married. For details and examples, see the full post.